Hi everyone, this is John Parisi. It is June 23rd. Markets closed. I want to give you a quick update before we head into the weekend. Our last video to you was on June 13th, the day before the Fed meeting, where we, like everybody else, were pretty confident that the Fed would pause raising rates for the first time in over a year. We got that on the 14th, the next day. But the press conference was really interesting. So we knew it would be a hawkish pause because, as we said in our previous video, there's no reason for the Fed to announce that they're done raising rates, because then the market gets euphoric again and it kind of unwinds the slowing down that they're trying to orchestrate to keep inflation low. So there was no reason to do it, but it was really quite funny. They came out of the meeting, and when Powell gave his press conference, he announced no change in rates, and within seconds said, but 5 members see 1 more rate hike, 3 members see 2 more rate hikes, and 2 members actually see 3 more rate hikes. 3 more rate hikes this year, and yet it was a unanimous vote to pause. Not one dissent. That I don't want to use the word silly, but that was kind of silly. So the market was falling out of bed until someone asked a question about, well, what did you guys talk about for July then, if you got all these rate hikes coming? And his response was, oh, July was never even discussed. So that didn't make sense, that you've got all this, they're very proud to announce that there are all these hikes coming, but then they didn't even talk about anything but June. So again, one more indicator that this Fed's credibility is kind of tricky right now. They're doing a pretty good job for pretty tough circumstances. But anyway, like we said in our last call, that we were overbought. We got very cautious in the last week. We saw the market roll over this week. No surprises there, and there's nothing really broken in the system. That's not something that we're really worried about just yet. It's not news driven. It's purely on technicals that are pretty easy to see. So we're actually not overbought anymore. We're not oversold. We're kind of in this neutral territory, but we like to put money to work when things are scary and beaten up a little bit. So we've got to wait there. We're going to post a chart that I put in all our letters. I actually put a little circle around 4,250 to 4,300 on the S&P just for kicks. It'd be a good place for the market to tuck into, see if it could catch a bid from there. It doesn't mean it has to, but that would be a good thing where maybe we're getting to a point where things are overdone on the downside and we can feel comfortable putting fresh cash into the market again. But again, we're long-term investors. These aren't recommendations to buy or sell anything. They're just provided for informational purposes, and they keep us sharp. But we're just going to see what happens. The only fly in our economic equation here that's bugging us, fly in our ointment, is leading indicators just continues to trade lower. Came out yesterday at negative 0.8% for something like the 14th or 15th month in a row. Leading indicators represents the economy 7 to 9 months from now, and it's really hard to get bullish on the economy until they begin to show some sign of stability and a bounce. I've actually never seen them go this long without a severe market pullback. That could have been the October 13th low we saw last fall. That was pricing this in, and maybe we've recovered from that, but we need to watch and see. That being said, the more it goes down, the more the Fed is absolutely going to be on hold and possibly cutting rates toward the end of the year. But the jury's still out on that, and we're still out on that. That's it. Just a quick update. I want everyone to have a great weekend, and we'll talk to you next week. Bye.